My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Did the CDC finally give us the all-clear sign today? A signal that those of us who've been vaccinated can go back to our normal lives? It sure feels like it. If you've gotten the jab, you can take off your mask and maybe even shake hands or hug another human being. And I think that's a chief reason why the averages roared today. The Dow surging 434 points, the S&P jumping 1.22%, and the Nasdaq rising 0.72%. But it's not all good news for the market. The CDC's new guidance also means you're going to get clobbered if you keep owning the lockdown stocks. Instead, you need to circle back to the great reopening plays. In the words of CDC Director Walensky, anyone who is fully vaccinated can participate in indoor and outdoor activities, large or small, without wearing a mask or physical distancing. Now, wait a second. You're probably confused. I don't blame you for being confused. Because, you see, this is the same person who broke down in tears 6 weeks ago and said, I'm going to lose the script. I'm going to reflect on the recurring feeling I have of impending doom. Maybe your impending doom comment worked by scaring us into getting vaccinated, or maybe this is just an incredibly confusing moment. I'm going for the latter. Either way, in early morning, it looked like we were headed for still one more day of everything rolling over, led by the turbocharged revenue growth stocks with no earnings. We then started rallying, only to once again begin the steady afternoon slog down until her comments turn the market around for good. Now, I know the CDC's comments are a big deal. I know that it's worth some celebrating. But let's break this rally down into its real component parts and figure out what really happened, because it has as much to do with real-world asset prices as it does with this light at the end of the COVID tunnel. First, you need to understand that this phase of the bull market's all about keeping inflation tame enough so that the economy can grow without overheating and forcing the Federal Reserve to slam on the brakes, which is what everyone has it's got everybody frightened. I mean, there are those of us who believe, like Fed Chief Jay Powell, that inflation can be tamed on its own if we just give it time. We've got a bunch of supply shortages, and those tend to be self-correcting historically. Production goes up, demand goes down, problem solved! But then there's another camp that thinks it's already too late. The inflation train, well, it has left the station. So you need to circle the wagons around the inflation winners and dump nearly everything else. This latter group's been in charge for months now. You just may not have known it. It really just surfaced big time in the last week. And their worldview has crushed entire cohorts of stocks, both speculative and sober. Well, first, they took out the high flyers with no sales and no earnings. Then they shot the ones with good sales but no earnings. Then they obliterated those with great sales and only some earnings. And by earlier this week, well, they were selling everything. Even the ones with great sales and great earnings. Think FANG, something that had been sacrosanct until the last week. That cashed-in money that they took, the source of funds, as I like to say, that they took from those, well, it flowed into a handful of companies that make a fortune when inflation is raging because they're the ones causing it. The last few days, the bull market was limited to companies that dig up resources, sell them, because almost every day commodities went higher and higher. Something that's terrible for everybody except the suppliers of those things. And by the way, almost everybody is not a supplier. Today, though, we got a stunning confluence. See, first, in a pretty big surprise, a major commodity got crushed. I'm talking about oil, where traders got the surprise of their lives when they found out the Colonial Pipeline Company paid a $5 million ransom to the hackers who shut down their pipeline. Small price to pay to get business going again. Now, look, we don't even know if it was a quid pro quo. We don't really know much about this thing at all, but it was shocking. And every speculator who had been hoarding oil off this incident suddenly had to give it up When oil ticked down before it opened, it ultimately plummeted more than $2. That dragged down bond yields. So even though we got another hot inflation number this morning, this time it was the producer price index, the decline in crude startled the commodity traders who've been betting there could be no ceiling on anything. Of course, it wouldn't have mattered if it was just oil, but lumber, maybe the most egregious of commodities, finally seems to have peaked. Lumber's been on a tear, running from $300 to nearly $1,700, but we've had 3 down limit days this week. That's a classic sign of a blow-off top. I'm going to drill down on that later in the show. These days, commodities tend to trade together because we've got so many investors trying to hedge against inflation, and they're using commodity ETFs that link everything together. The combination of 2 of the hottest commodities, oil and lumber, getting smashed has spilled into the whole complex, causing nearly everything to trade down that had been trading up relentlessly. Okay, that's part of the story. The rest of it has to do with tamping down excessive speculation. You and I both know we've been in the grips of a speculative mania. Oh, geez, you know, these high flyers and then the SPACs and especially cryptocurrencies. Now, we're going to talk to Coinbase later in the show. But just like lumber led commodities down, crypto speculators got crushed when Elon Musk announced that Tesla would no longer let people buy cars with Bitcoin. Musk has gone from the Pied Piper of crypto to the nemesis of crypto. Hey, he trashed his beloved Dogecoin on Saturday Night Live. Now he's decking Bitcoin itself, the bell cow of the entire speculative conceit. From Wall Street's perspective, that's fabulous. So remember, I keep telling you the bond market's calling the tune. And there's nothing the bond market hates more than inflation and rampant speculation. You slay both of them. If you crush both of them. If you cut their heads off. Even if it's just for a day. That allows bond yields to go back down. Even when the CDC gives us the green light to go back to normal, you would have expected rates to just to soar. This insanely positive market is the result of all that, where all but the most speculative stocks, the equity equivalent of cryptocurrencies, and the stay-at-home plays roared. Those were the 2 that got killed, okay? Now, let's think about that. That's what got crushed. So as long as commodities were on fire and speculation raged, what did it do? It made Fed Chief Jay Powell look foolish for insisting that he didn't need to raise interest rates because he says inflation's temporary. Today, though, he looked like the most prescient man in the world. Anything that allows you to believe that we can have growth without inflation is going to send the stock market higher. Everything from the financials to the tech to the consumer product names. They all roared today. If you think that's all way too pat, let me tell you what else has been way too pat. For the last weeks, all sorts of stocks have been mowed down because doom was in the air every day. That's led to a sudden resurgence of short sellers betting against stocks because, after all, inflation's bad for the market. But what happens if we can get inflation under control? Well, then you get more days like today. Well, can it happen again? I say it all depends on 4 things. It depends on the dreaded 4 speculative horsemen of the stock market apocalypse. Yes, oil, lumber, Bitcoin, and the Wood stocks. The highly speculative stocks beloved by Cathie Wood, formerly the portfolio manager with the hottest hand in the business. The bottom line, if oil, lumber, Bitcoin, and the Wood stocks can keep going down, the 4 horsemen that slay the bull, then you're going to get many more days like today. If not, then this rally will turn out to be nothing more than a temporary reprieve.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.